Welcome to this training video on financial literacy and ledger management for small business owners. Keeping track of your money is a crucial aspect of managing finances for a business, big or small. The golden thread that follows through this course is the importance of financial literacy and understanding the different tools and techniques available for tracking money. In this section, we will go over the basics of ledgers and provide a step-by-step explanation on how to record transactions in them. A ledger is essentially a book which businesses can record their financial transactions. It contains a list of all the transactions that have taken place, along with the date, description, amount, and account with which the transaction is to be credited or debited. To start recording transactions in a ledger, you will need to create a list of all the relevant accounts that is relevant to your business. Once you have this list, you can start recording transactions. Here's a step-by-step guide. The first step is to identify the transaction that you would want to record. It could be a sale, purchase, payment, or any other financial transaction that has taken place in your business. Determine the accounts involved and determine which accounts will be affected by the transaction. For example, if you sold goods to a customer, the accounts involved would be cash and accounts receivable. Record the date. Make sure to record the date on which the transaction took place. Enter the transaction details. Next, enter a brief description of the transaction and the amount involved. Debit and credit accounts. Determine which accounts should be debited and which account should be credited. In the example of a sale, cash would be credited and accounts receivable would be debited. After recording the transaction, make sure to update the balance of the accounts involved. As a business owner, it is crucial to understand how these ledgers are used and to keep them accurate and record all transactions. Doing so will help you make informed financial decisions and ensure the success of your business. In accounting and financial management, the terms debit and credit have specific meanings and play a crucial role in maintaining an accurate record of a business's financial transactions. It is recommended to work with a professional accountant or financial advisor to ensure proper recording of transactions in the ledger and to receive guidance on using debits and credits correctly. Additionally, regularly reviewing the ledger and financial statements can help business owners stay on top of their finances and make informed decisions about the financial well-being of the business. The dealer trick is a popular mnemonic device used to help people remember the concepts of debits and credits in accounting. Let's take a look. So dealer stands for, first, the D. Debits increase assets and expenses. E. Expenses are debited. A. Assets are debits. L. Liabilities and equities are credits. E. Equities are credit. R. Revenues are credits. By using this simple acronym, small business owners can easily understand the concepts of debits and credits and how they relate to one another in the ledger. This can help business owners better understand the financial health of their business and make informed financial decisions. You can ease the burden by using accounting software to manage your small business finances. In today's world, there are many tools that can help small business owners keep track of their business finances. One such tool is a simple spreadsheet or accounting software such as Ubuntu SBS ERP, QuickBooks, Xero, SAP, or Sage. These tools can help business owners keep a record of their transactions and understand their financial position. In this video, we will focus on Ubuntu SBS ERP and give you a step-by-step guide on how to use it to manage your business finances. Using a spreadsheet or accounting software is simple and straightforward. First, you need to set up your accounts. This would include categories such as cash, bank, credit card, income, and expenses. Then you can start recording transactions by adding a date, description, and amount. The software will automatically calculate the balances for each account to give you an up-to-date view of your financial position. An advantage of using a spreadsheet or accounting software is that it saves time and reduces errors compared to manual ledger keeping. It can also provide valuable insights into your finances, such as identifying trends in spending and income. Additionally, it makes it easier to create reports such as income statements and balance sheets, which can be useful for tax purposes or for analyzing your business's financial performance. To get started, here are some action items. 1. Choose a spreadsheet or accounting software that fits your needs. Set up your accounts to start recording your transactions. Review your financial position regularly to stay on top of your finances. Now, to reinforce the concepts covered in this training, we suggest you perform the following interactive exercise using the Ubuntu SBS ERP system. This exercise will give you a chance to apply what you have learned in a practical way. In this exercise, you will use the Ubuntu SBS ERP system to record a transaction in a ledger. Follow the step-by-step instructions provided below to complete the exercise. Step 1. Log into the Ubuntu SBS ERP system with your login credentials provided. Step 2. Navigate to the accounting system in the Ubuntu SBS ERP system by clicking on the accounting system module and then on the accounting tab. This will take you to the accounting interface where you can record transactions. Next, we will create a list of accounts. Before recording a transaction, you will need to create a list of accounts that are relevant to your business. In the Ubuntu SBS ERP system, click on the Chart of Accounts module and create a list of accounts that you will use for recording transactions. Next, we will record a transaction. Using the Ubuntu SBS ERP system, record a transaction in your journal ledger by following the steps below. 1. Create a new journal entry. Navigate to the Journal Account tab and click on the plus button on the top right of the page to create a new journal entry. Choose a transaction that you would want to record, such as a sale or purchase, and identify which accounts will be affected by the transaction. Now, record the date on which the transaction took place, enter a brief description of the transaction and the amount involved, determine which accounts should be debited and which accounts should be credited. The debits and credits must always balance according to the double entry bookkeeping principle. The Ubuntu SBS ERP system will automatically update the chart of accounts and the financial reports with this transaction. Next, you can review the ledger to see whether the account has been properly propagated. To do this, you can navigate to the Journal Account module and back to the Journal Account. Here you will see the ledger. Ensure that the transaction has been accurately recorded and the balances of the affected accounts have been updated. Repeat this exercise by recording different types of transactions. Try recording transactions for different accounts and practice using the dealer mnemonic to help you remember which accounts to debit and credit. Step 8. Review your financial position. Review your financial position regularly to stay on top of your finances. Use reports generated by the system to understand your business's financial performance and identify areas for improvement. Make informed decisions to keep your business on track for success. In conclusion, using a spreadsheet or accounting system like Ubuntu SBS ERP can help small businesses keep track of their business finances and save time, reduce errors, and provide valuable insights into their finances. By taking the time to understand and use the correct system, small business owners can make informed financial decisions and keep their business on track for future success.